The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody, and welcome to another Roundtable event hosted by Altius Healthcare Consulting Group. We have a pretty full slate of panelists today, so we're going to go ahead and get started fairly quickly here. Just a few housekeeping things for you right before I hand it over to CEO Stephanie Dorwart. If at any time today you have questions for our panelists, feel free to use the questions panel in the GoToWebinar app. You can enter the questions there. We'll pass them along to the panelists at an appropriate time. And for those of you watching today on Facebook Live or YouTube Live, you can enter your questions in the chat windows there. We'll be monitoring and passing those questions along as well. Now, without any further delay, I'm going to pass it on over to Altius CEO, Stephanie Dorwart.
Thank you. And thank you, everyone, for joining today. I'm very excited to be joined by our panelists today from both ACT, Arnett Carbis Toothman, as well as RCS, Revenue Cycle Solutions. We have an exciting and packed slate for you, so we are going to keep our comments from the Altius Healthcare Consulting side short today and really focus in on the expertise and knowledge that our panelists are bringing to the table. The conversation today is going to be focused around all things finance, and in that, we're going to specifically address revenue cycle issues that deal with things such as contactless patient registration, as well as questions that we've received about how you can move your central business office to a remote access site. So we're moving into those. We'll talk about revenue cycle strategies, and then we're going to wrap up with some funding questions. And a lot of questions are coming into us about the funding options that exist right now. So we're excited today to be joined by Dan Theory and Mike Evans from Revenue Cycle Solutions, and by Greg Gibbs and Jim Rowley from our ACT. So without further ado, we're going to get started on the first section of our presentation and discussion today, which is going to deal with the revenue cycle side of things. So Dan, if you want to take a minute to introduce yourself to our audience, and then we'll move right in, and Mike, you can do the same thing.
Sure. Yes, Stephanie, thanks for the invite today. My name is Dan Theory. I'm one of the managing principals here at Revenue Cycle Solutions. Our firm's been in business for a little over 18 years, and we specialize primarily in rev cycle operations for hospitals and health systems, as well as interim management services.
Fantastic. Welcome,
Mike,
Dan. Thank you.
Do you want to
Mike?
introduce yourself?
Yeah, Mike Evans. I'm co-managing principal with Dan Theory. Been with Dan now for the last 3 years. By experience and training, I'm a former hospital CEO with about 18 years experience. So I've seen a lot of perspectives on the business from both vantage points as a small business owner and as a hospital CEO.
Excellent. So the first topic that we're going to address really is something that we've been getting a lot of questions on. Many of our clients and listeners are really concerned right now about the revenue cycle side of primary practice and specialty practices, as well as, how you can really build out a contactless patient registration system. So today we're going to hear from Dan first on what this involves with some great tips. So Dan, take it away.
Okay, thank you, Stephanie. Yes, we're working with several of our hospital clients, primarily hospitals and larger health system clients on this contactless registration effort. There's a lot of information out there from various industry sources at the present time. I can just share with you today some of the work we've been doing as a company firsthand for our clients. And what is contactless registration? Not to oversimplify it, but it's essentially working out all the steps necessary through scheduling a patient, pre-registering a patient, and patient intake. And if you think of all the steps that a place is typically involved with, we have to move each one of those functions to a point where there's no patient contact or minimal patient contact. So that's been the challenge. I can tell you at the onset, there's no one size fits all here for as many facilities as we're done that are a challenge to try to create a contactless process with. They include, but are not limited to, some pre-visit forms, those forms that we have patients fill out either prior to or at point of registration. Signatures on those forms or another challenge, and you have to put in some other measures to achieve the contactless measures. Collecting payments at point of registration has been a challenge there as well. So this next slide is something that is pretty recent, and you can see, and I think it's not a great surprise here to our listeners, but you can clearly see here from a patient scheduling perspective, as well as from a patient registration perspective, that many facilities have either already altered the way they do scheduling and registration, or are right in the middle of planning to do so. And a much smaller percentage really haven't had an opportunity to look at this. But I also want to clarify this chart here. It's really measuring organizations that have altered it in any way, and many of these adjustments are not ideal. They're more out of a crisis situation. A lot of this has kind of come upon us quickly, and many facilities were scrambling to try to establish this the best they could. So a lot of this, despite what's showing here in these charts, of having altered the process, we'll need to go back and relook at that and redesign that and put something in place more for the long term. So just wanted to share that with you. It's certainly the trend in both scheduling and in pre-reg. So next slide. So starting with scheduling, there's some opportunities. There's challenges in all of this, but I believe there's some great opportunities here as well, based upon the work we're doing with our clients at the present time. Scheduling, we're collecting patient insurance information, demographic and medical information needed at point of registration, or I'm sorry, at point of scheduling. We also try to get as much insurance information and get the physician's orders and identify what the patient responsibilities are as much as we can as well. So that's all taken place during scheduling. Some a small thing that's been added as part of this contact list effort is to instruct the patient to not show up prior to their appointment more than 15 minutes prior. And if they do so, we're basically instructing the patient that they have to wait in their car, and they'll be contacted by text or by cell call to come in at the appropriate time. And obviously the effort there is to minimize the number of folks that are typically waiting in the waiting room. Another piece that's common now is that no family members are allowed to accompany the patient on their visits. And that's in large part being practiced, at least at all of our client facilities. So with regard to the scheduling, again, most hospitals are making a greater effort to do a better job at point of scheduling to capture all insurance, demographic, medical, give them that instruction. And where possible, they're having them advance email copies of their insurance card, their ID, their physician orders. That's kind of a work in progress. We're working on with several hospitals on that front. So next slide. The next area that's in the middle here between scheduling and the data service is what hospitals term as pre-registration. And I can tell you for years, and it's still this way to a great degree now, there's still a major disconnect between the patient scheduling function and the patient pre-registration function. So this is one of those opportunities for facilities to really focus on combining those functions into one effort. And in doing so, it's a more streamlined process. It does provide for a better patient experience and better patient service. And it allows more time for the facility to gather all the essential information, including verification of a patient's insurance. So the next stage is when the patient arrives at the facility. There's some, you can go to the next slide, please. There's some precautions there and some new things in place there, obviously starting with the PPE that the staff is wearing. A lot more plexiglass everywhere these days, and this is no exception. But upon the patient's arrival, we're screening, or most facilities are now screening the patients with a series of questions and temperature checks. They're also validating what they're there for, confirming the date and what service they're scheduled to have that day. And if all that checks out from a screening perspective, the patients are then directed to the clinical area for their service. But before they do that, they at times have to stop at the registration desk there to finish out on any things that are still deficient. For instance, if they still don't have a copy of the card, they may have to view a copy of the card. Forms that need to be signed, that's another area. Under the current status, we're under a health emergency status across the nation right now, and what that means is hospitals are able to take verbal consents from patients and basically sign on the forms themselves if the patient was informed verbally and no patient signatures necessary while we're under this health emergency status. And this now is extended through the end of May and maybe extended longer depending upon the need. So that's a big help to most facilities in that they don't have to put a piece of paper or even an electronic signature pad in front of the patients for signature. So that's a help at this stage. And with regards to the payments that are due from patients, that's typically done in advance over the phone, or it's done at this point in time, but the patients are the only ones scanning their card, and everything else is done from the other side and beyond the plexiglass. So that's kind of some of the changes that are put in place now relating to the contactless registration. Next slide, please. Are there any questions on the contactless effort at this point?
Yeah, before we move on, Dan, just a few comments. I think that This has been a great opportunity for healthcare organizations across the country to really explore and review, their registration process. And I think what we've heard from some of our clients that we have found that they learned it was more disjointed than they actually thought it was, meaning that a patient may have to register 3 or 4 times to come in to see their primary care physician because they're having labs drawn, they might be having radiology services. So trying to consolidate all of this into one pre-registration process that applies to all services has been something our clients have been focused on. And I think you addressed that. And I was blown away by one of your first slides that saw that nearly 10% of organizations at the time of the survey had not addressed any changes. And I find it hard to imagine that under the state of emergency with all the changes, that 1 out of 10 didn't change anything. So I'm curious what your opinion is of that. Mike, you might have something to weigh in on there as well.
Mike?
Mike.
There we go. Yeah, I think given what we've all been through with the pandemic, I mean, there can be no improvement without change. I mean, I think what all hospitals, physician practices have experienced is going to force some radical change, and I can comment more on that during my piece of the presentation. But I think every administrator really needs to look at all their processes, all their processes to make sure they're as leanly managed as possible. I've termed this whole pandemic as one of the great lean management exercises we've ever been through, because you're really forced to identify what is of value and what is waste, what's perfunctory, and really focus on what is mission critical. Though that has to be the priority, no matter if it's the revenue cycle or clinical care. I think we're all being forced to focus on what is most important to really our mission.
Yeah, I 100% agree. And, when we're talking about managing remote staff in the central business office, one of the things our clients have been talking to us about is the fact that before the pandemic, they had one plan in place, and it might be building out a very large central business office. In some cases, there was new construction of new buildings that were going to house the finance staff, the HR staff, and all these large components. And now that they moved a lot of that remote, the question now is, what do we really need? How big should the operation be? And how much can we keep remote? And then more importantly, how do we manage those remote workers ongoing? So I'm really excited about this next portion, Dan. Sure.
Thank you for that. And yes, with regard to the remote, and it's interesting because we're working for a large health system in the Southeast currently, and it was just that scenario, Stephanie, whereby we had gone through a significant comprehensive plan to move all of our mid-cycle staff, some 200 employees, about 10 miles up the highway, and it was we didn't even think about it at the time of planning, but it was a one-for-one move. But we had to rapidly respond to this COVID matter, and in doing so, my associate and I, we've moved inside of about a week and a half to get over 200 employees set up from home. It was quite a crisis situation and all hands on deck. But the good news is we were able to do that. We had some bugs and some things to work out and some IT help to do so. But now moving forward here 2+ months, a big discovery has been made here, and the discovery has been, this is working pretty well in many aspects, and so senior leadership of this system that we're working for came back to us and basically are challenging us to say, we're not sure we need to open up this new building. We're not sure we need all the square footage we originally thought. So our exercise over the past 2 months has been, over the past 2 weeks now has been to go back through the roster that we thought we were going to move and really challenge ourselves to see what can continue to healthcare and other industries, roughly at about 43% of folks working from home. And some of the clients we're working for, we're settling in now at about 65 to 67% of our revenue cycle workforce now being able to work remote. So you can see that just continues to climb. So in moving to the next slide here, this doesn't come without its challenges. I think I think in a crisis situation, we quickly mobilized to get everybody connected and to maintain day-to-day operations. But if, let's face it, it wasn't ideal because our practices, our processes, our procedures weren't really completely designed for folks to work remotely. So that's the piece that we need to circle back on and kind of redesign to some extent for this to be a lasting long-term solution. So these are some of the takeaways I have with some firsthand experience in managing remote staff. First, it's to clarify the schedules. It's important. Some folks need to collaborate throughout the day, so they need to be on similar schedules. Sometimes there's an outside business need, like that's when insurance companies are open or patients are available to talk to or whatever. So the schedules are still important and they need to be set for a variety of reasons. Really take another look at their primary functions and how they perform their work, all with this remote concept in mind. And it was surprising because a lot of them, with little adjustment, we were able to get them more focused on what the primary role of the job is and take away the incidentals and kind of reassign those elsewhere in order to maximize the number of folks that we're able to have work remote and work in a productive, effective way. And creating the workflows is obviously part and parcel of that. And these are all things that we needed to take a second look at and to further revise. Is there any questions on anything yet? Okay.
No, so on the next slide, I think one of the questions that has come up is flexible scheduling. And traditionally there have been very set office hours and very set schedules. And in the COVID-19 world and the homeschool world and everything else that people have been dealing with, I think flexible scheduling has come up. So one of the questions we've had is, how do you manage the flexible scheduling component and determine what the best model is?
Yes, great question. My answer is it depends. but some of the flexible scheduling is very beneficial. I'll give you an example. So we might have pre-registration staff that need to verify and check patients' authorization and have packets ready for the patient's arrival the next day. That's an example of a function that's ideally done on second or third shift to be ready for the next morning. But in other instances, as I mentioned earlier, staff need to collaborate during certain business hours, or they need to be working when insurance companies and patients are available. So, but overall, it's great to have that flexibility, and we let that we really let the primary functions of the job and the business need of the function drive that. But by all means, if we can be flexible with it, and we are, and we try to accommodate the staff the best we can. And so that to me is a net plus, no doubt about it.
And one more comment before we move on to the defining roles. I think from a productivity perspective, aligning the schedules of the staff, in that flexible workspace, as you mentioned, Dan, can really help to align workflow and have a lot of the tasks completed before the office staff is even ready to start appointments the next morning. And so from that component, there are a lot of patient registration things that can happen in the evening. And I think it's a great model for productivity and to really consider what times of day are best for some tasks to be completed. And as you mentioned, you have to have access to the insurance companies. But it strikes me that it's going to be a great move for productivity of revenue cycle registration staff in general.
Oh, yes, absolutely. And I just think it'll make the overall revenue cycle effort more productive. There's just so much opportunity there with this remote setup, and so many more options for us to take advantage of. So that's working out well. Defining roles and performance expectation. This is a challenge both for the new staff as well as the existing team members. And okay, there we go. And sometimes it's harder. You got to switch things up in terms of the contact with the remote staff, making sure that we're more readily available to answer questions, to provide guidance. If they have an issue, we want to make sure that we're the contact. It has open lines of communication, because obviously that's lost when you don't have, that physical presence there in the office. But going forward, all of this remote, the remote aspect of this needs to be really baked into all the onboarding. So typically, historically, traditionally, we've hired new employees in for our clients. We give them the regular training, and then we send them to their workstation to begin the work. Well, there's some extra components to that now with this remote component to everything they do. So that's being worked in there. Creating workflows, again, I think we talked about that a little bit. That is one thing that most hospitals should pay attention to. All of the historical workflows that you have in place that your folks have been following, you definitely want to review those and make sure that they're conducive and can be adequately supported in a remote model on the primary functions that they perform, and paying special attention to the incidentals that they historically performed. And these are the same types of things that will require them to be on site physically. So we stripped those away and got those condensed down to a few staff members that are on site in more of a support role to perform those functions. Okay. Promoting effective communication on slide 12. Technology gaps, yeah. So I think we can jump right over to slide 13. And these are some of the things that hospitals should pay special attention to. If the expectation's there for staff to perform many of their duties remotely, then I think the facility needs to be ready, prepared, and proactive with the technology component, both in the way they provide the software. The hardware, everything from laptops to desktops to headsets and all the things that a person will now need to work remote. That needs to be provided. Connectivity really needs to be tested. In obviously, security is paramount today, in so many hospitals for all the known reasons. So I would encourage hospitals to first, look at the hardware, make sure. And preferably, anybody working from home should have a hospital machine supplied by the hospital with all the appropriate security measures and capabilities loaded on. The connectivity really needs to be supported by IT, monitored by IT, and just to ensure the connectivity is there and the speed at which it needs to function is present. I think that's it for that. If we can go to slide 14, this is another area that I would encourage hospitals to look at if they haven't done so already. Many hospitals are still working directly out of their legacy systems, and in many instances, the ability for a hospital to adequately monitor the production and the quality of work from their revenue cycle staff is lacking, to be nice. So I think a lot more enhancement can be had there, either to further enhance the legacy system that they're using to allow for greater monitoring of staff production, greater monitoring of the quality of the work they're doing. And if that's not possible with the legacy system, I would encourage hospitals to consider use of a layover system. There are several out there in the marketplace. I know with some of my clients are using MedMetrics, other ones are using Aurora, and there's probably a half a dozen others layover type systems that hospitals can use. The reason I bring this up is because measuring staff productivity and the quality is paramount, especially in this remote working environment. You can't just send folks home that have connectivity without you having a good idea of what they're doing and how they're performing and how productive they are. So I would encourage hospitals to really scrutinize that if they haven't done so already, because it's going to be important to the longevity of this setup. So open to any questions or comments on that.
I think, productivity is probably my favorite slide out of the entire presentation, as you can imagine. And it's definitely a hot button for us. We get asked often, how can we manage our metrics in production? And I believe it becomes even more important in the remote setting. So it's definitely something to have a handle on, making sure that expectations are clear, communicating those expectations with your staff, and then most importantly, having the accountability system in place that you can actually monitor and follow up. You know, a report that's going straight to their inbox is great, but if you're not actually going to take action on their performance metrics or what you're seeing, then it's really, you know, not going to provide you with the results that you need. So great slide, and I really think that's an important piece.
Sure.
Yeah, so let's wrap up with, you know, you have one slide on quality, Dan, so we'll do that. And then I have a good question for both of you before we move on to funding.
Okay, great. And yeah, with regard to the quality, some basic things a hospital could do at any point in time, and I would encourage is to just do periodic audits of specific account populations. If you want to, there's no better way to know firsthand what your billers are doing, what your collectors are doing, how cash application is posting payments, adjustments, write-offs, than to take a representative account population and just audit those. And I think that's probably the single best thing you could do to get a better handle on what's occurring there. But again, you absolutely need the ability to measure the production and the quality of your staff's work. And it shouldn't be an onerous process. It should be one that you can do at minimum on a daily, weekly basis, and ideally on a concurrent basis. And many of those layover systems out there really enable you to do just that. So again, I would challenge the hospital leadership to take a closer look at their current abilities and take the steps necessary to enhance those capabilities.
Excellent. A lot of great information, Dan. Appreciate it. So before we hear from ACT and updates on funding that's available, you know, through the hospitals and requirements, I'd like to ask the two of you just a general question on revenue cycles, and we'll move into some general questions, you know, on strategy, Mike, for you at the end. But, you know, right now, you know, CFOs, controllers, financial teams are really sitting back and thinking, you know, how is COVID-19 going to impact us? What do we need to be prepared for? And you know, what from a revenue cycle position do we need to do to make sure that we're accelerating cash capture? So in your opinion, what are the, you know, 3 to 5 things that all CFOs and revenue cycle staff need to be focusing on right now? You know, if they haven't done it already, what should they be doing today?
Okay. Mike, you want to go first? Or
yeah, I'll take a shot at it. First, I think this pandemic has really brought maybe more focus on the revenue cycle. I think it's probably more important now than it's ever been to have an efficient and productive revenue cycle, both on the hospital side and the physician practice side, because both sides of that equation have taken a big hit. You know, generally speaking, I would say that, and Dan can echo this, everywhere we go, we want to emphasize that there be a revenue cycle team that meets at least monthly to review all the processes, procedures, all the key metrics. Every hospital should have a scoreboard, some kind of a scorecard of all the key metrics for the front end, the middle, and the back end of the revenue cycle. I think that's key to review those monthly to make sure you're on target with all your performance metrics. All your employees should know what those are. So that's certainly one thing that needs to occur. The second thing that comes to mind is that the revenue cycle really needs a full-blown assessment, like every 2 years. There are too many moving parts. There are too many updates. Continual updates to that revenue cycle that need to be managed. So to have an assessment done every 2 years is probably worthwhile. That includes the charge description master. I am continually surprised at how many hospitals don't update that routinely. I think that's critical. And then I quote a very, very good CFO who said, the revenue cycle is never, ever completely fixed. So it bears monitoring continually, especially now. So Dan?
Sure. Yeah, thanks, Mike. Yes, I think to answer your question, Stephanie, I encourage most CFOs at this point in time. It's an advantage, even though many facilities have received an accelerated Medicare payment that, from a cash flow perspective, will bridge the gap for many facilities. You know, the last 90 days worth of revenue is almost non-existent for most facilities. So it was a great opportunity for most to kind of work their old AR, but it's also an opportunity now, while these younger aging categories are relatively empty, to really challenge the IT and the systems they use for much greater integration. Still today, many hospitals we see is too disparate of a process. I think there's still significant opportunity for greater integration, data flows through systems to streamline processes from beginning to end. And not to oversimplify that, but that to me is still the biggest, most beneficial thing that they could pursue at this time.
Great advice. I really love those ideas. And I think it's, that's a great checklist for all CFOs and controllers to look at. And you mentioned one piece in there, Dan, that's going to give a great transition into the funding portion of this. You talked about the prepaid Medicare fees that a lot of hospitals have received. And that's something that ACT, Arnett Carbis Toothman, is going to talk to us a little bit about. It's not a grant. It's not money that's coming in. It's money that already is prepaid for future services. So it's really a way that you have to understand that cash flow that you have and the cash that you have today is going to need to be the cash flow for your patients that you're going to see down the road. So let's move on to the next side of this and welcome Jim Raley from Arnett Carbis Toothman. And we're going to hear about some funding updates that he has for everyone concerning really, what funding is out there, what strategies do you need to take, and how do you really account for that? So welcome, Jim.
Thanks, Stephanie. And I have along with me Mr. Gibbs, who is on the phone. So, Greg, I don't know if you want to introduce yourself.
I will just briefly. Greg Gibbs. I am a partner with Arnett Carbis Toothman along with Jim Raley. ACT is a large regional accounting firm that specializes in healthcare, primarily serving clients in Ohio, Pennsylvania, West Virginia, and mainly all over the country. So I'll let Jim go ahead and introduce himself and take off, and then when we get back after his presentation, then we'll address a few things that we have in our mind that we're seeing as major issues with funding.
Thank you. Like Greg, I'm also a partner with ACT. Work 100% of my time in healthcare, and 90% of my time within healthcare is spent working with acute care providers, meaning hospitals, LTACs, providers of that nature. So, like Greg said, we just want to take a couple of minutes this afternoon, base set a little bit on the Provider Relief Fund, and then also talk about as we work through the slides, we'll talk about some of the other funding opportunities that might be out there. Largely, we're going to ignore or set aside the Paycheck Protection Program. We think a lot of time has been spent on that, and there's been a lot of webinars. We're going to focus on the Provider Relief Fund as we go through the slides. So if you want to go ahead and go to the next slide. As most folks know, the Provider Relief Fund really was established through the CARES Act in March, and then subsequently it was also additionally funded through the Paycheck Protection Program and Healthcare Enhancement Act. That actually added another $75 billion to the Provider Relief Fund. So going over to the next slide. Now, so we've got $175 billion in the fund at this point, or we started with $175 billion rather. To date, a little bit over $70 billion has been dispersed. $50 billion was really the first round of disbursements, and that was split into two tranches. Many of you would have participated in this round of funding, and if you watched it closely, you probably noticed that the funding was a little bit turbulent in just how it was rolled out and how it was funded. So the first 30 of the 50 billion, they actually came out. The 30 billion was based on providers' Medicare revenues, or how much they had billed traditional Medicare. And then subsequent to that 30 billion going out, HHS came back and reshuffled the whole deck. They added 20 billion into the pot and really recalibrated the entire payment so that at the end of the day, your payment should amount to about 2% of your program service revenue. And if you're a nonprofit, that would be line 9 on your 990. Now, one thing I do want to point out here, one important deadline that is coming up, HHS has at this point deferred the deadline for attesting to these payments a couple of times. At this juncture, though, they have come out and said June 3rd is the last deadline they're going to issue for attesting to these funds. So if you've not gone out and looked at the terms and conditions and considered doing the attestation, I would certainly encourage you to do so. Depending on how you were paid in the first 2 tranches of round of disbursements. The second round was, that's where HHS slowed down a little bit and said, okay, we're going to target the next couple of distributions. So the second round of distributions was the $12 billion that went to the COVID hotspots or the high impact areas. Now that $12 billion was split up among 395 hospitals. So it doesn't take a great mathematician to look at 12 billion and realize it went to only 395 hospitals to quickly realize that that high impact area distribution was some big dollars to very few hospitals. So we did see some significant payments go out in that rounding. Now on the next slide, where we see and where we've seen a lot of our clients really impacted positively by this fund is the $10 billion that went out to rural providers. So the facilities that were impacted by this round of funding were critical access hospitals, rural health clinics, rural PPS hospitals, and rural FQHCs or federally qualified health centers. This round of funding, you know, it was really interesting how CMS came out and did, or HHS structured the payments. They set base payments depending on provider type. Hospitals had a base payment of about $1 million, where rural health clinics had a base payment of $100,000. Now, the way the calculation was done, really your first 10 million of expenses really drove the amount of payment. So if you're a hospital and you had over 10 million in expenses, largely your payment was going to be a little bit over $3 million. After you get over to the 10 million in expenses, the payment really drops off, or the increase in payment, incremental increase in payment drops off. So that was what in the world of hospitals, largely the biggest impact we've seen to clients has been through this rural targeted allocation. Now, there was some additional funds that went to Indian Health Services, as well as HRSA for uninsured COVID patients. We're not really going to get into that in this session, but we put those in there just to point out that did happen. The last bullet point here, I think, is really important, in that there's still $100 billion left out there that has not been dispersed yet. At the beginning of this funding, HHS was really moving at about 1 disbursement per week. If you remember the timeline, they would typically roll out the payment later in the week, and then a couple of days later come out and really get into the detail on the payments. Now, we haven't heard anything from HHS for a couple of weeks. What we're being told is that HHS is working through the Medicaid data. If you follow the HHS funding, they did come out and say that they expected to do targeted payments based on Medicaid providers, or targeted for Medicaid providers. So we do expect to see something in the coming weeks, but at this point we have not seen anything. So go ahead to the next slide. So, you know, when you're looking at the funding, if you watched CMS Administrator Seema Verma's initial comments, she framed the Provider Relief Fund payments as essentially no strings attached payments, And she also clarified that they were grants, not loans. Now, no strings attached turned out to be not exactly true, in that the next day when the payments did come out, there were 11 pages of terms and conditions. Obviously, some of the terms and conditions do cause issues for various hospitals. You know, something that a lot of hospitals are dealing with right now on the rural side is that at this point they've received funds largely in excess of their lost revenues or incurred expenses. So they are sitting on quite a bit of cash right now that at this point in time they cannot justify. Some of the other issues that are starting to come out are in the terms and conditions. They come out and say that the funds can't be used to reimburse expenses or lost revenues attributable to other sources. So when you are talking hospitals, especially rural hospitals and critical access hospitals and rural health clinics where you are cost reimbursed, that certainly causes some issues as far as just calculating exactly what your lost revenues are, and how to take that into account when you're looking at cost reimbursement versus reimbursement for lost revenues. We also, when you're looking at some of the other issues, entities that have received Paycheck Protection Program monies or FEMA monies or other monies from states or reimbursement increases from states, there's a lot of issues that are going to come out with these provider relief funds that we're just going to have to wait and see, unfortunately. Now, the last two items are probably the biggest two items because I think they drive everything above them. HHS has come out and said that these funds are going to be subject to federal audit, and they have come out and said that there are going to be reporting requirements with these funds, but they haven't come out and said exactly what the reporting requirements are. So that's where we are with the provider relief funds currently. We want to go ahead to the next slide. I think, you know, when we're looking at hospitals and health systems, certainly there is a lot of uncertainty right now with where is your cash position going to be in 6 months or in 3 months. As states start to do their soft reopenings, we're seeing hospitals reopen and volumes aren't popping back in a lot of cases the way they were expected to. So a couple of things that we have noticed and that we think are very important are that, you know, CFOs, CEOs, those in charge should really look at their financials, understand that you're going to continue to see significant fluctuations in your financials for a couple of months at least, to where you go from a bust really. And if you all remember back a short month or two ago, there was an incredible amount of uncertainty as volumes were dropping off. Cash was drying up very quickly. There was really a whole lot of panic in the market. And then some of these provider relief funds came out, and facilities may have went from 1 or 2 days cash on hand to 100 days cash on hand. So we expect to see that boom bust cycle continue. And as it does, we think, you know, communication is obviously key in any of these situations. But communicating with your lenders, with your workforce, with community, looking at really all your stakeholders within your entity, and keeping open lines of communication with them is paramount in these situations. The third bullet point in here is document. You know, the provider relief funds are largely to reimburse entities for lost revenues or expenses incurred in relation to COVID. So, and we'll probably get into this here in the next slide or two, or in our following Q&A. when you start trying to measure something that doesn't exist, meaning lost revenues, there is not a whole lot of certainty. At this point, HHS hasn't given us a great framework for how they expect that to be done. They've said, look at prior year to current year or budget to actual, but they also said any reasonable estimation is acceptable. So in these situations where we don't know what the equation is going to look like, or if HHS is going to give us a definite method for estimating lost revenues, obviously anything you come up with right now, make sure when you're looking at your expenses, you're tracking every dollar that's spent, you're retaining invoices, you're keeping a log of expenses incurred and just why they were incurred, how they relate to the provider relief funds monies, and how and when they were spent. And obviously, the last point here is plan. Make sure, and we touched on this a little bit earlier, the Medicare advance payments, those were loans, which is going to cause really your cash flow over the next 6, 8, 12 months to be much lower than it otherwise would have been. So plan for that. Try and reach out to your lenders, get the additional liquidity available to you. Start lining those monies up now. If you've laid off workers, largely we've seen that some of those folks have gone out and gotten other jobs. So assume that some of your workforce is not going to return from furlough. And then obviously play out the what if scenarios. If there is another subsequent shutdown, or if, on the other hand, if volumes really come back strong, do you have the capacity or do you have a plan to handle that? So that's our quick overview of the provider relief funds and some of the issues we're seeing. Do you have any questions?
Yeah, so I think one of the things that we've heard, Jim, is that there's a consensus that they believe that hospitals should not profit from COVID-19. What do you think the government may do in the future to, monitor that a little closely? Or Greg, Mike, anyone, what do you think is going to happen to make sure that hospitals aren't profiting from COVID-19? I think you touched upon it, Jim, that, you have to track your revenue versus past revenue. But I suspect that as this moves forward, there's going to be a lot of reporting requirements. One of the questions that we had was, how can we best be prepared to respond to the requests that we're going to have for information from the federal government?
Yes, I agree with you. At some point, I think the media is going to start to see, and as quarterly quarterly reporting goes out, and we actually saw it when HHS first released the payments on the provider relief funds. The news media jumps all over it. They love to see that a nonprofit hospital got $100 million. And that, that just inflames everybody. So I do agree that at some point there's going to be clawbacks, especially, the last $100 billion is largely going to drive, I think, what happens in how HHS disperses that money. I think that's going to really drive the subsequent clawback of it. But, as we discussed, there is no way right now, no clear way to measure lost revenues. They didn't exist. So, like I said, try and figure out as many different ways. Either look at trend analysis, look at your, and we say old budget, your pre-COVID budget to actuals. Look at the 2-month trending, if you're trending up or if you're trending down. Every hospital has a different story, and just how they measure lost revenues is going to vary widely between facilities. But I would tell folks, get as granular as possible. We have some clients that are going clear down to cafeteria sales, medical record sales, as granular as they can possibly go. Get granular, document it, and unfortunately wait and see, I guess. and see how HHS really what the reporting requirements look like.
Perfect. And Mr. Gibbs, I think this question may be best suited for you. And, it is right now we're experiencing a lot of volatility in our financial statements and a lot of unknowns. From an auditor's perspective, what are you most concerned about for your clients moving forward?
Well, right now, a lot of these funds, how hospitals are accounting for them and how those will either be loans that have to be paid back or grants that can be taken into income is one of the big concerns that we have for financial reporting. Fortunately, a lot of hospitals will have either a September or December year end, and you'll have a little bit more time to have information to kind of sort through what the resolution of those funds will be. I think I would refer back again to what Jim said is, the most important thing you can do is keep detailed, meticulous records of what's going on and document it well, and keep that for support for future funding requests also. So that's really the biggest thing. The other thing is really just overall financial viability of hospitals and health systems. As we perform financial statement audits, we have to determine if a hospital is a going concern or not. And hospitals and board members are asking us questions about, what's our financial viability? Can we survive this? And again, I think Jim talked about financial planning and how important that is. And the issue right now is everyone is so busy and so caught up in dealing with current issues, is they do have to stop and realize that long-range financial planning is still very important. Dealing with capital needs, dealing with what's going on in the bond market, in addition to worrying about accounting for the funds, and then also what are you going to do if there is a surge in patients, which everyone hopes for. So those financial issues for us auditor types do keep us up already at night and will continue to. But there'll be more information, but I think that's the main thing, Stephanie, that I would alert everyone to pay attention to.
Thank you. And I think this is probably a question that might be fielded by anyone, but what are your biggest recommendations right now? My staff has worked to put together a 26-week cash flow projection, and we're trying our best to do our planning to make sure we have enough cash to make it through the next 6 months. However, are there any recommended scenarios we need to plan for, or what's your best guess at how to plan? So this can probably be fielded by anyone.
Well, Stephanie, I'll take a shot at that. I mean, I heard Jim and Greg both mention that there's so much uncertainty in the market right now. It's not funny, and I think that is very true. And if I'm a hospital CFO or CEO, I'm going to try my very best right now, starting now, to take as much uncertainty out of the equation as possible. I want to try to control my own fate as best I can. If I'm a CEO who has just made it through or about to make it through the whole pandemic issue here, where I've taken big hits to my revenue, I'm going to want to enact some strategies that are going to help me longer term. And I think you're going to see probably a rash of affiliations and mergers over the next couple of years. Again, I wouldn't want to go through this alone again. And I think what we're seeing in terms of supplemental funding by the government, whether it's Medicare, where there's going to be some clawback provisions or not, I don't think it's enough. I think it's a short-term solution. I don't think it's going to be the be-all and end-all in terms of securing a more viable future for many hospitals. Unfortunately, I think that many hospitals may end up in bankruptcy or even closing, particularly the ones that are small and rural. Those hospitals have been besieged by reimbursement shortfalls for years now. Okay, and then you throw one more straw on top of that, and it's a big one. It's going to be very hard for hospitals to recover. There's going to be a lot of things happening with I think reimbursement and with insurers. I think there's going to be probably a harder, faster move to the whole volume to value equation. I think it's going to be more in play. I think there's going to be probably more risk arrangements. If I'm a CFO, I'm going to take a look at all my contracts. I'm going to take a look at my physician contracts, my union contracts, my insurance contracts, and see what I can do there to free up some more money. I don't know how hospitals, will continue to sustain employing physicians when each physician is touted to lose $150,000 to $200,000 per year, particularly when hospital volumes are going down and will continue to go down. So that's a real, I want to capture every single penny of financial credit for all the clinical work that we do. Somehow, some way, you've got to be able to take that stance. So there's going to be continued cost cutting, and there's going to have to be continued efforts to increase revenue. But I'd want to control my own fate as best I can.
Jim, Mr. Gibbs, anything you want to add to that?
I'd echo what Mike said. To the folks that asked the question about how they have a 26-week cash flow projection, I think that's great. The quick, easy answer is anytime you're dealing with emergency situations, cash is king. So stack up as much cash as you can. Reach out to your lenders to the point you can get a larger line of credit available to you. I'm not saying go borrow on it, but get that line of credit available to you. Assume the worst and hope for the best, I guess, is probably the most succinct way of saying it.
Yeah,
I think so. And I'll wrap up. We have one more question, but I will just say that, I think we were all surprised at the amount of change that had to happen in the first week or two of the pandemic as everything moved remote. We brought on a lot of medicine, telehealth, artificial intelligence solutions, security features. So as an industry, we had more change probably in 2 weeks than, I'll say maybe 10 years. As an industry, healthcare has been very slow to change, slow to react. We tend to have a history of planning and planning and planning to plan. And, I think in this situation, the advice that I would give, to executives, senior leadership teams, this is not the time to sit around and dwell on if you should make a decision or make a decision for the next 3 to 4 weeks and then ponder it and guess, is this the right one or not? This is a time to take as much data in as you can to understand the situations and to respond. We're not going to have the time to respond as an industry 3 to 4 months from now. A lot of hospitals have the PPP loan, that 8 weeks of support. They have the prepaid Medicare payments that's going to run out. So the guidance that we've been giving is just look at all the data, take time, understand the situation, and as a senior leadership team, put in place a strategy and make sure it's a strategy that you can stand behind and be quick to change it if you need to, but you have to act and you have to act quickly. And so the last question that came in, and Mike, Dan, I'm not sure if you agree to this or not, but the question was, you mentioned that there are a lot of revenue cycle solutions benchmarks. So number one, would it be possible for us to receive a copy of that if we reach out? And then number two, what do you think are the top 3 to 5 revenue cycle benchmarks that are in place today?
We can certainly supply you with what we consider to be like our top 10 revenue cycle metrics. And Dan is best versed in terms of detailing exactly what those are. But there are probably 2 or 3 for patient access, mid-revenue cycle in terms of coding, documentation, and of course on the PFS end there are a litany of days cash on hand, those kind of things. But we can get you our top 10 in terms of what we look for. And Dan, you're here. Why don't you comment on it?
Sure, no problem. And yeah, we'd be happy to share, whoever wants to reach out to us, who would be happy to share the typical metrics that we use. As Mike alluded to, that we do set up for our clients what we consider to be the most key metrics in each of the rev cycle areas. And I would say right now, it's a standard measurement is the cash to gross charge and how that's performing. And another area I think is worth taking a second look at in this day and age is your payment accuracy with your managed care contracts, as well as your the leakage you might be experiencing by way of denials or reduced payments. It's a good time to take a cold hard look at that. And as Mike alluded to earlier, you really take another look at those provider contracts, vendor contracts, and see what you can do. But yes, we'd be happy to share those.
Excellent, thank you. So
Thank you.
we have no further questions from our audience, so we'll just conclude with, are there any lasting, words of advice, counsel that any of you have for the audience, for our listeners, for our clients, and for the healthcare industry at large?
Well, I'll give you one, Stephanie, based upon the comments that you made. I mean, we've been forced to undergo a lot of change in the last few weeks, last couple of months, actually. I would encourage people not to try to recapture the past of 2 or 3 months ago. Okay, I think there's too much change that is underfoot right now. I'd be looking at, where's the business going? How do I get there? Not try to get back to where I was back in January and February. I'd be looking ahead and how I need to change my business to adapt to what's coming down the pike.
I think that's great advice. It's changing, living in a virtual world.
Yeah.
And I would echo what Mike said. I think the healthcare world has changed materially. Some for the good, some for the bad, but it has changed. It's not done changing yet. So like I said, to the earlier question, at this point, plan as much as you can, expect the worst, and hope for the best. It's nobody knows what tomorrow's going to bring.
Yeah.
Yeah, I certainly agree with that. One of my favorite phrases right now that you hear often is, always go to zero. So whether it's zero budgeting or zero, pretend like you are not going to have any revenue coming in the next 3 months, go to zero, and what are you going to need to do to sustain? And I think that's, great advice for a lot of hospitals. Where are we? Let's assume our volume drops to zero tomorrow. What are we going to need to do to, correct it? What are we going to need to do to reach out to our patient population? How are we going to sustain? What do we do to communicate that we have safe environments for our patients to come to? So it's a very interesting time that we're living through, and I really appreciate all of your comments today and the information provided from the funding side of things, as well as the revenue cycle solutions. So Greg, Jim, Mike, Dan, thank you so much for joining. It's been a pleasure.
Thank you.
Thank you.
Thanks for having us. Bye-bye.
And to our listeners, for anyone that has questions, please feel free to reach out to our panelists. They'll be happy to join with more information. And to everyone else, we look forward to joining you on our next Roundtable podcast. Take care.